Thanks, Ron. Do appreciate that. So this is a portion of the presentation where you get a chance to ask some questions. So we'll let you all do that. I wanted to try to dig up my 2011 predictions because honestly I had no idea how I did, good or bad, since you guys were brave enough to show your last year predictions. So I tried to dig up my slide from last year. And if you do have questions, go ahead and put those in, and I'll jump over to those, and myself or the other coaches will answer. So looking at last year, I mean, I did all right. I mean, we could argue, did 2011 continue the market bull? I don't know. I mean, it was break even to slightly higher, so that's questionable. Unemployment definitely peaked. Housing did find some stability. I don't know if we would say IPOs were back in a big way. There were some, but obviously I think 2012 will have the bigger ones, such as obviously Facebook. We had some interesting ones in 2011. Corporate earnings, probably like Bob pointed out, that was probably wrong. They probably really hadn't peaked. They actually even improved in 2011. And then, of course, the whole Android versus iPhone. I really felt that would drive a lot of what was happening in the tech sector, and I guess arguably to some degree that's been the case. Probably my worst prediction of all was this one. Once again, that's just a dumb prediction overall, so that just goes to show you. But with that, let's go ahead and look at some questions here. So let me open up the panel and see what we got. One thing that I wanted to mention when Ron was sort of talking is that he does real well, and just understand, we do a lot of sort of mechanical-based, rule-based systems, and especially on swing trading, he always looks at the broader context of what's happening, and even if something doesn't quite meet his full initial mechanical objective, he'll make adjustments and really take what the market will give him, and I think that's probably a good lesson in there. I know that's something that we try to do. A lot of times it frustrates people because they want everything to be 100% mechanical, but unfortunately the market just doesn't really listen to what we want. So that was just something as he was talking that I thought of. So some questions here. Steve's asking, has the MF Global issue changed the way you are investing? Should we be concerned about accounts with, say, TradeStation or Ninja? Well, Ninja's not really a broker, so they're not going to hold any of your funds. I don't know. Any of the coaches have an opinion on fund safety, or did MF Global change the way you thought about where your account was?
This is Bob. I can speak to that.
Go ahead.
Oh, okay. No, it really didn't. I, like everybody else, probably shuddered a little bit and did a little investigating to find out, gee, am I at risk for that? The bottom line is all the top brokerage firms, and you should all be trained with a top brokerage firm, not some fly-by-night thing, but all the top ones, you now lose your money separated from their trading side, but they don't trade. They're just straight brokerage firms. The problem with MF Global was that they had a trading side and the account side. And for your typical Schwab, TD Ameritrade, your Thinkorswim, your TradeStation, any of these, Trade Monster, what have you, they really are there to service their clients and their clients' brokerage needs, and their money is not at risk. So there's no real danger there. I also looked at the insurance situation with federal government insuring up to so many. I think it's I'm not sure where it is, a couple $100,000 per account, and considered moving money around to different accounts to alleviate that potential risk. But then again, I looked a little deeper and found there's really no credible risk for a trader's account in a typical mainstream brokerage account. I don't know if any of the coaches have looked into it as well, but those are my findings.
Great, thank you. Any other coach? I don't know, want to weigh on that at all? Okay, so let's move on. Question from Hamid. It's which platform do you or should I use for trading Forex, oil, gold, using NetPicks strategies and systems, NinjaTrader, or MT4? I mean, to me, if you're trading futures, you can exclude MetaTrader 4. So typically, our answer would be TradeStation or NinjaTrader, since you can chart Forex, oil, gold, futures, Forex, stock, options. If you're trying to do Forex only, then certainly you can stay with MetaTrader. I think when you want to open yourself up to things outside of Forex, you do need to go to one of the more universal platforms, so TS or NT. Alan's asking, when is the market volume going to pick up? It's barely a pulse lately, so I don't know, even Will, if you want to grab that one since you talked the most about the volumes being so low recently.
Yeah, I have no idea is the answer. I think we're going to see, whenever we see some nice breakouts on strength, we may be forming a new trend and getting some volume back, but there's no way to predict that.
Sure. Yeah, I agree with Will. I think the volume's going to pick up, though, when the stock market starts going down.
Yeah, that's probably a definite safe bet on that. One thing, if you notice when TJ was showing his charts, it's even always been an expectation of me too early on. I always expected, the day after New Year's for the markets to go right back to normal and be crazy volatile and a lot of fun. And I've noticed definitely in recent years that's about the last thing that happens, in particular the first few weeks of January are just about as dull as the last few weeks of December, I think usually until we get to earnings season. So if I was going to guess, it would become Feb 1, those bars will start to tick up, but that's my guess. Let me see what else we've got here. Just reading through a few things. Scott was asking, Ron, so are you live? Oh yeah, so what Ron was showing you was he was discussing, I think, Ron, right, your UST VIP, those are the swing trades that you cover in there, is that correct?
Yeah, that's correct. Basically, for the last, year and a half or so, I've been, I call a live swing trade room about 5 o'clock New York time in the evening. Just a quick update on about, 10, 12 pairs that I trade. And, so you can kind of come and listen live or you just see the trades and stuff like that. And I think Mark mentioned, about a copier service. We're adding that to that type service. So, but not a lot of people are on MetaTrader 4, and so they can't, do the oil or they can't chart, because I do tick charts. It's a 987 tick. Extremely good. I've done, in fact, I'm going to post another video on the UST site. I've done several month reviews of it. It's just so reliable. There was a short this morning, right down to target exactly, 45-cent short. It's just pretty much you can trade it 24 hours a day. But yeah, that's just one of the things that I do for NetPicks, and it's been very successful. I mean, a year and a half. The people that are in the room, they really enjoy it.
Another question there, Ron, for you real quick. What time frame should we use for the U.S. franc? I think you were showing 4 hours. Is that correct?
Yeah, the Swissy is, I actually look on the 30-minute, the 1 hour, and the 4 hour. And I do that. The 4 hour is just, I will always take a trade off the 4 hour. But sometimes the 4 hours, already in a trend and I can't quite get in it, I can catch those reversals. Like if I pulled up the 1 hour chart, that short on the Swissy, that 1 hour caught it perfectly to the 1x and the 2x. So a lot of times, I'll kind of look and see if I can catch a move earlier on a shorter time frame. I will do that.
Great, thank you. Let me see here. Well, there's a couple questions on which trade system to use, etc. Keltner Bells versus SST. I just think we're comparing apples to oranges there. Obviously, if you're at all thinking day trading, then it's all about the SST. You cannot day trade with the Keltner Bells. If you're strictly thinking Forex swing trading, then your answer is the Keltner Bells and that. So that's probably the best answer, really. It depends on what you want to trade. A lot of people trade both or both styles, like a lot of us, so then it may be a combination of the two. And when I say combination, I never mean to mix signals, of course, but using both strategies. Many successful traders use multiple strategies in what they do, just to obviously have the smoothest possible equity curve. Question from Phil, what time frame do you use for crude oil? So I'm going to answer first, but I know a lot of us mentioned that, so we're going to get probably very different answers. But for me personally, I always use what I call dynamic range bars. So I'm using range bars, but I don't always use a fixed range bar. Like back in November, December, it was more in the 10-cent range. Right now it's more 8 cents or maybe 9 because the volatility, like Will was showing and even TJ, has decreased. And I think that was mentioned by a couple of people where you need to adjust based upon current market activity. But I'll let some of the other coaches jump in because I know we've got some tick-based, etc.
Well, I'll chime in because I've been calling live trades on crude oil now for a year and a half with the 377 tick chart, and it's just been really steady. It just continues to do what it does, but there's a lot of good time frames. I know we have some members in the room that are using a 610 tick actually later in the session, so they'll start with the 377 and then it'll move to the 610 later in the session, and that's been a pretty reliable time frame, although bigger. You got to really keep your risk in check. I think crude oil moves so well that there are plenty of options. You know, there's some nice Renko bars too, but I'll see what everyone else has to say about that. If anyone has anything to say.
Yeah, the day trading, the 377
same thing as you said.
Is right. That's a good staple for us. We do it every day in the live room. Swing trading, I like the 987. You know, I also have looked at some share bars, still around that level, the 987,000 tick or share, kind of looking at volume.
Yeah, and then as far as hours, I think Phil, you followed up. I think most of us would agree. 9 o'clock New York to about 10:30. We can argue. What's best overall. Will, of course, will talk very much about first 30 minutes, somewhere in there. But in general, the trade plans are typically that 9 to 10:30, some derivation of that, and we usually are very careful on the weekly inventory report day. If we take a trade before, it's usually 1. If not, we wait till 2 minutes after the inventory report, Wednesday at 10:32, usually. So anyway, hope that helps you guys. Differences between UST and Keltner Bells, probably not the best place to go into a big discussion on this, but really completely different strategies. The similarities, of course, they both swing trade Forex, right? They both swing trade some of the same markets. Keltner Bells trades some maybe more exotic pairs that the UST isn't currently, and then of course, like we're talking time intervals, Keltner Bells is only range and Renko, and UST basically is time and tick. So those are the differences there. Let's see, Daniel talking about, well, we may have, Daniel, in the case you're asking about doing some live in-person training. On occasion we do that. Actually, TJ on occasion has done it in Europe over the past year. I know he's got some plans potentially to do another live training, and we did one as part of the SST Pro in Florida about a month or so ago. So we'll have some of those opportunities, I'm sure, during 2012. I don't know on the calendar exactly when, but just read the emails coming from us, and we'll keep you up to date and let you know on that. So with that, I think I'm going to go ahead and wrap it here, since we went on for a little while. We had a lot of people speaking, so we actually did really good for the number of people contributing today. So I hope you guys got some good little tips out of that. We appreciate you joining us. We're excited, definitely, about 2012. Lots of good opportunities. You can see we've got some differing opinions on where we think the year is heading, but I think we're all kind of unified and really our approaches to the markets overall. So with that, thank you to all of the coaches, and thanks to everybody else for joining us live or listening to this on a replay. So have a great trading year. Thank you, everybody.